Hello, welcome to lesson number 4 for trading basics for beginners. I made a small course just for beginners so we can all be on the same page as we start trading together. Let's go over the risk management and position size. I'm really big at position size. I trade very small, but consistency for me is the key. So let's go over it. My name is Selena and I've been trading over 7 years now. Can't believe that's the number, but here it is. And I try to share my knowledge as much as I can and what I know with you so you guys would know things that I wish I knew. So we're gonna go over why risk management matters. Why does that matter? No one wants to be wrong. No one likes to see the stock goes against you or the trade to go against you. So what do? We get very emotional and we start losing more than we winning, or our losses are bigger than the amount wise in our winning. So good traders manage the risk. Great traders survive because of it. I do say that a lot is a survival game, and a lot of times I'd be like, okay, I survived today, or I did not take a trade, or we survived. So the way the power of small risks works, if you risk 1%, if you take 10 losing trades in a row, your total drawdown, it will be 10% in the minus. What if you risk 5% for your trade of your capital? Same 10 trades will put you at minus 40%. Isn't that crazy? I think it's pretty deep, and it gets deeper, right? If you risk 10% of your capital and 10 trades, you're gonna have minus 65% of your account. So why this matters? Why not risking too much of your capital? Why does it matter? To me, the short answer is survival. You want to survive. You want to have your capital to trade another day, another month, and so on. So you are protecting your account from large drawdown. You keep your emotions in check. You allow the strategy and to play out. You build consistency, right? Didn't we talk about consistency? And the market always be there tomorrow. So if you don't find a trade today or it went against you, like you want to survive, so you can also come back tomorrow. Never lose money you cannot afford. That's a big one, because if you, one of the thing, it's like people like try to say, I want to quit my job. I want to quit my job. I'm going to do this trading and I'm going to quit my job. So it's really hard because your job, it is supporting you to be more emotionally stable to trade, because you don't have the pressure to make X amount of dollars a month. It is big. It is really big. So the money that you lose or not even lose, put in the market, not a right completely thing to say that, but you just can't live off them. You can't expect that, okay, I'm going to double my money in a couple months, and that's when the gambling comes in, and we don't want to do that. So don't take mortgages out, right, for your life and leverage yourself so much, because the stress will be so hard to handle that you'll be forcing trades 100%. And then the truth about trading is you can have the best strategy in the world, but if your money management is poor, you won't last. And also, if you do take loans out to be in trading world, that already tells you that you're not necessarily managing your assets as it is. So, but capital is your greatest asset, protect at all costs. If you put the money in the market, you know that you work really hard to save that money too. And when they say trade with disposable income, it's not necessarily completely disposable. When they say trade only with disposable income, it's not completely true, because you don't want to be money you just dispose, but it's just money you don't need to pay your bills or buy food and be extremely poor in your life, but pour everything into markets for a whole. All of it will compound. Even if you start with a small amount, if you discipline, this will compound. It will take time, but it will compound. So I think all of that, like the poor risk management, consistent management, good risk management, the goal isn't to make money fast. The goal is to stay in the game long enough to make life-changing money. Like I said, it's going to compound. You'll be taking the same trades, you're just going to get paid more. What are you really trading for? You want the financial freedom, the time with your family, life experiences, peace of mind, and then money is a tool. Life is the goal. And you don't see me show off too much with the money. I try to do percentage-wise, because it's not the goal to show and look at me. The goal is to show you that you could gain so much more time back because of trading. Once you break through, it is a pretty good situation to be at. You don't have a boss, you're your own boss, but you need to build up the capital, which we all understand. And this is a strong sentences. Amateurs focus on how much they can make, professional focus on how much they can lose. You go in on the trade, you like how much percentage wise I want to risk. So that's what the risk management come in. Pretty basic. Like I said, it's a basic lesson. But position size. I am really big and I helped a lot of people with this. So I will spend some time on this, analyzing this. So size small to stay in the game, size right to win. So once you have, we say a lot that in our community, win-win. Even if it's $20, we're protecting it, we win-win. And too large, you're gonna sing, right? Because one time you're gonna make it, the second time you're gonna get lucky, the third time you're gonna have confidence that you can go in big, but one wave will take you out. The problem is that will take you out forever. You can't be smooth sailing anymore, and you'll be so emotionally stressed, not just to start from zero, but recover all of the losses that you had to recover. So what is positioning sizing? How many shares you want to do it? How many contracts you want to take? Why doesn't matter thing, self-explanatory. Why doesn't matter? You keep your emotions. It's a lot. Yes, you might be only $20 in the plus, but if it goes against you, it'll be only $20 in the minus. Sometimes you have to think opposite. It's not necessarily what you are gonna gain. It's like, okay, so if I go with this small size, I cannot lose more than $20, $30, $40, right? So remember that small size today can lead to freedom tomorrow, because the same trade that you're gonna take once you build up your capital, I've been saying this, the same $20 will pay you $200 because you already compounded your capital. You size according whatever size account you have. Like I said, you'll get paid more for the same trade, but at the same time, you already have more reps in it too. I'm really, really big about starting small and smaller size, and that way you have a lot less stress. But you don't want to get another job that you are stressing so much about it, right? We're talking about freedom. So the 1% rule, you can make your own rules. I understand. So it's like, if you risk one rule, what is the drawdown? If you risk 5%, what is your drawdown on the risk? And so risking, how much you're risking, increasing your risk, and you get to see all the breakdowns. The drawdown, how much you are in when you are in percentage wise of your account. Risk no more than 1% of your account balance on any single trade. It is definitely hard because we can also DCA. It is dollar cost averaging, right? So, but just be comfortable with the loss or the drawdown they're going to be in. So let's say I trade stock. So I will go in a stock and goes against me, but the money that I put it in the stock, I'm okay. I don't need to use it. I could wait it out. There's many ways to do the risk, right? I like straight stocks because they don't have expiration date. Or with futures, if you do futures, they don't have time decay. They're just a lot more leverage, and you trade small size. There's many ways how you can slice the risk. The bottom line is, I can tell you all these calculations and you see a bunch of numbers over here, is that the main goal is, I would like to suggest you, or would like to get you to the point where trading is not so stressful. Trading is hard already, but if you're going to add a lot more stress to yourself by sizing up because your X, Y, and Z reasons, is it really worth it? What's the name of the game? In my opinion, it's survival, longevity. And this is a stronger number than the slide before. You can be wrong 60 to 70% of the time and still be profitable. Do you guys know why? Right? Is it pretty self-explanatory? If you risk little, so your losses will be smaller, so you will not get deep cuts. You get paper cuts. I do them all the time, but your winnings will be bigger. So just example, if you risk one risk to reward to two risk to reward, the win rate only 35%, your reward per win still be 200, and you're risking 100. So how you come out in 10 trades, you come out with 700. So result still profitable, 100 to 200 profit. You still be profitable. So this is also like, if you visually will see it, how much you're risking and how much you're gaining. It is very important. It is mathematical. I know math is sometimes boring, but it is very, very important. So this is the amounts that you can lose depending on your risk reward. And if your win rate to break even is 20% and 1 to 4 or you lose 80% of the time. Very interesting. And it is pretty. It's a pretty powerful sentence. It could be wrong 60 to 70% of the time, right? Still be profitable. And why? Because your losses are smaller and your winnings are bigger. Stop losses is your safety net when you use a stop loss, right? So let's say I love reversal trading, and let's say I want to go long right here. If I don't put stop loss, it's just gonna keep going. It happened to me. Of course it happens. So you learn. You're like, okay, if it goes below, let's just say VWAP a little bit more, I'll have to give wiggle room. I will do more examples on other videos. You definitely, with smaller size, going back to the size, you can have definitely a lot more wiggle room. I know you guys cannot see this one, but I will read it to you. A stop loss is not a sign of weakness, it's a sign of professionalism. Right, so I was wrong. Reversal is not coming. Okay, paper cut, move on. And the setup was based on technical levels and based on my risk, but I keep it consistent because reversals, what, 8 out of 10? It's not a fact. It's just a guess that they do show up, but the 2 times they don't show up, I do get cut. It's just unprofitable because my stop losses protects me in a way. Has it happened where it take my stop loss and go my way? Yes. So the way I tailor that is that by taking smaller size, I could have my stop loss lower. Yes, it's more risk, but it is less amount risk because the contracts that I take are a lot smaller. Take profits, secure today, grow tomorrow. I know there's a lot of teachings about stop loss and take profit. I'm pretty quick to move my stop loss in the plus. And you guys heard me call this win-win situation where I win if they take my stop loss. So let's say my entry is here and it goes my way, my stop loss already protecting the gains and my take profit is here. So I'm happy if they take my stop loss, which is in a plus, or they're going to go to my take profit. Either way, I'm happy. So I say that a lot, happy. I'm pretty quick of protecting my capital. I don't have that. I need to show that I made crazy amount of dollars today. So that's what gives me peace in trading. And I'm a lot less stressed when I do that. You get to see this right here. It says a profit taken is better than a profit hoped for. Another thing that I love to say, it's like you can't go broke by taking profits, right? Will you be upset that it goes your way after it takes your small profit? Of course, but over time you'll be fine. We talked about the game of survival. Protect today, profits forever. So this is you worked really hard for this money. You worked really hard, and now you decided to put that money into the market. It is available for you, but it's yours that you did that. You worked for it, you saved it, you have it. You took some sacrifices, right? Some people skip coffees, which I don't think is a big sacrifice, but whatever life changes they had to do in order to accumulate that, you want to protect it. So you want to put yourself in a position where you're a little bit safer. That's why you hear me say I do trade stock. It's not about how much you make in a day, it's about how long you can stay in the game. Besides consistency, there is another big word, longevity, survival. And so when you manage your trades, you protect your capital, and compound will come. Like I said, the same trades that pay me now $2,000 used to be $20. The only difference, that zeros are added up because I have more capital that overbuilt over 7 years. There's no magic. And be patient. That's, I think, the reason I survived this long in this game. I'm patient and resilient, and the patience helped me to stay in the game a lot longer. This is a beautiful, you don't see, but this is the door to the freedom. So there's a lot. So like the compass, you have to stay on the course. What is your plan? So you have to stay on the course. You have to have discipline. You have to have consistency, and all these will show your way to freedom. So you have to have a plan and stick to it. I keep talking reversal trader. I do also continuation trades, but I wait for the pullback before I go in. So I do have a plan when I go in, when I read the market. You're managing the risk, you consistent, not perfect. I think that would describe me best. I am consistent, I'm just not perfect. Definitely. And master your emotions. Got some lessons about emotion trading and all that. Discipline today, freedom tomorrow. But the compass shows you have to stay on course. You can't get distracted. You can't have a background noise of either, I mentioned that before, in social media you see people getting this, getting that, or having this, having that. You can't. You just have to stay on your course. Go to the places you are set to go and have your plan, have your discipline and consistency, and all that will lead to the freedom, because the door for your freedom is different than the door for my freedom. That's why I don't really compare or compete. There's no point. I'm in a different stage maybe in life than you are. Kids' ages, or just wishes, things that I want could be very different for things that you want. So you have to have your own compass, and that's why I'm pretty big also. Don't copy anybody. Do your thing. And time in the market rewards the discipline. And what is a discipline? With all the storms, you guys think it's easy when the market is going down and you do have a lot of money either in your 401k, so in your trading, account, it's no fun. But if you stay disciplined in the long game, right? It is long game. You have to have your visions for a long game and let the time do its job. It will pull back. It will go against you. Of course it will. You don't need to be right every time. You just need to stay in the game long enough for your edge to play out. And once you build that capital, you'll see how small move pay pretty big amount. So we don't need to be perfect. We don't need to risk a lot. You don't have to risk a lot because once your account grows, you're still risking the same percentage of account. So like if you let's use a $20 account. Let's say you did before with $1,000, you made $20 percentage wise. Now, if you have $10,000, you will get $200 pay for the same trade. The thing is, you still risking the same amount of dollars and you taking profit at the same amount of percentage wise. All the time, it will all gonna compound, but it will take time. It takes a lot of patience. You have to stay consistent every day. You will find your freedom for sure. And the mistakes that beginners make. They trade with emotions. I mentioned before we have psychology lessons. It's deep. It gets really deep. No plan, no edge, risking too much. That's a big one. Over trading is a big one. No stop loss or poor position sizing. And mistakes are normal, right? Mistakes are not always mistakes. A lot of times we'll be like, okay, I read this article. This looks like a good stock. I want to go in. And then it goes against you. So it's not necessarily a mistake. Some things could happen in the world or economic changes. We don't know. So they happen. It just, we try not to repeat them again. And we turn mistakes into lessons. Like, well, last time I bought this what happened. You're focusing on the right habits, but the right habit should be not just in your trading. And I think from your morning routine all the way to how you make your bed. But that's my personal opinion, to stay disciplined for the most part. No one is perfect, but for the most part, 80% in your life, it will be a good start. And your best trades are still ahead. And I mentioned before, when you emotionally stay stable, if you make so much or if you lose some, like, it doesn't really bother you because you follow your plan, you follow your levels, and whatever happened doesn't affect you as deep anymore. You really grew as a trader. And my rules, my edge, my freedom. Don't trade what anybody else is trading you. Yes, I do share what I trade. I do share what I like, and I learn from other traders, but it still has to be your way. Your way. So capital comes first. You follow your plan. You stay patient. Quality over quantity. I take maybe one, maybe two trades. Today I took 4. It was a very, very hard trading day. So for me, that'd be considered over trading. But let me tell you, not that long ago, probably I would have taken 20 trades and that'd be a normal day. So I also believe growing all the time in your trading journey. Review and learn. I mentioned that before. If you have seen the videos, you have to review not just your bad trade. I like being positive, and just you can review your good trades and say like, okay, I did this good, and why did it work out my way? And then your brain will get used to seeing all the good things, and the next time the same setup shows up, it's like, I know you. And staying humble, it's a big one, because if you don't stay humble, the markets will humble you. If you've been in this long enough, you would probably laughing with me. It's funny because it happened to all of us. My rules today and my freedom tomorrow. So we are unstoppable, we are resilient, and we have the plan, we execute, we improve, or we win, and we have consistency. We're going to compound everything. I understand it's easier said than done 100%, but thank you so much for watching me all the way to the end. I know it's a little longer video, and I can't wait to start progressing in the videos and make them more advanced.